Hi guys, Whitney here. I'm the Director of Investor Education here at passiveinvesting.com. And thank you so much for joining me today on our next episode of How to Invest in Passive Real Estate. This is the series where we teach you how to build passive income and long-term wealth through real estate investments. And maybe you've tried to invest passively before, but just couldn't quite get comfortable with making the investment. You're just like, I don't really know. Maybe you don't quite understand this. Or you've invested in a deal before and you're like, whoops, I made a mistake. I need to go back to the drawing board. Or you're just so overwhelmed by all the information out there that you just haven't gotten started. Well, in this series, we help you learn the biggest myths that investors have around passive investing that keep them sidelined and never get in a deal. And then we help you work through all the different terms, the pros and cons of investing, even the math around passive investing, so you can avoid making costly mistakes. And then we're just going to show you how to put all this knowledge to use and action so you can confidently make your first or next investment. But let's go ahead and debunk a couple myths right now. One, passive investors tell themselves that they can't invest passively because they just won't have the control. And I love blowing this myth apart, especially if you're coming from the world of stocks, bonds, and mutual funds. Because, in all honesty, I know when I was investing in that space, I never researched any of the companies that went in the S&P 500. I wasn't sitting on the board. I wasn't getting regular updates on the business. I had no idea what was going on. I didn't even get to decide who was in the index fund. If I loved one company, they could move out if they faltered over the next quarter. Okay, so in reality, I love investing in assets that I have a large element of control over. And number two, investing myth that investors tell themselves is that they won't make that high of a return. There's just no way. I have to actively control the asset in order to make a high rate of return, versus doing it passively. And I can tell you from being both on the active side of things, real estate, and the passive side of real estate, passive investing allows you a huge immense of scale, of economies of scale, okay? And we're gonna bust this myth apart today pretty hard. So before we dive down this rabbit hole, again, my name is Whitney. This is me and my crazy crew. This is the whole reason why I invest passively in real estate. And so I can have experiences with my family and travel the world and just do the things that I love and create an impact. But it wasn't always that way. I started off investing in 2002, living, flipping, and house hacking, very much on the active side of things, with no leverage, which is what we're going to talk about today. And it took an immense amount of hard work in order to get to where we were today. And it wasn't until that we realized what we needed was to get onto the passive side, the rental, aspect of real estate, that our portfolio really started taking off. And when we decided to partner with seasoned operators to invest our dollars, that's when our wealth and equity accumulation really started to supercharge itself. So fast forward today, lost my cursor there for a little bit. Fast forward today, we've partnered in over 6,300 multifamily units, doors, and more than 1,400 self-storage units. Okay, now these are vanity metrics. It's the result that you're after. And for us, we've been able to dictate 100% of our time. We have freedom of our time. We have choice on how we spend our time. Okay, we have choice whether we work, whether we don't work. Okay, who we spend our time with and what we do. And to me, that is the ultimate leverage that I can get from passive investing. But passive investing, you might see anybody on their successful real estate entrepreneur. You see the awesome results, okay? The tip of the part of the iceberg that's above water. There's a lot of work that goes in underneath, okay? And that we don't see. And so I'm going to help you kind of collapse time through this video series so you can actually start achieving results faster. And we can help you do that here at passiveinvesting.com. And we've partnered, in over $742 million of real estate, multifamily and self-storage. We've acquired over 4,200 doors. And most importantly, what I get to do here on a daily basis is work with our happy investor base. All right, so this series, it's for educational use. We are going to dive into some finances. We're going to talk legal. We might tap into some tax topics throughout the series, but this is educational. So make sure to take any of the financial, legal, or tax information back to your team and consult with them prior to making an investment. All right. So let's dive into our topic today: how investing in syndications creates massive life leverage. This is one of my favorite topics when it comes to investing, passive investing. But let's first define what is leverage. Okay, leverage, dictionary definition tells us that it's using a lever to exert force on another object, in an effort to move it. Now, leverage can come from financial leverage, operating leverage, personal leverage, time leverage. Okay. Now, what if we could get all of these type of leverage in one investment? And I'm going to show you how. Okay. Let's talk about the 5 wealth pillars of real estate. Now, if you are unfamiliar with real estate, and how it can produce returns, is that, for one, it's created over 90% of the world's millionaires. Number 2, let's talk about how. Okay, real estate can essentially take the dollar and use it in 5 different ways. Okay, we can create cash flow with it. We can allow just for market appreciation, things naturally grow in value. Okay, over time. We can get some sort of equity with it, maybe through forced equity, through like a rehab or adding additional streams of income to a property. We can potentially, depending on how things are structured, get tenant pay down, where the tenant is paying part of the principal down on the loan. We can also get leverage. Okay, in this case, leverage means putting lending on it. We can partner with a bank, other people's money, okay, to amplify our returns. And then we can also get pass-through tax benefits from the government. The government understands that private investors are in much better position and more able to create housing and opportunities like storage and real estate opportunities than they ever could. We're far more efficient, in our capitalist society as doing that. Now, this, as you can see here, I'm actually pulling operational leverage as well as financial leverage. Okay, so that's amazing. All right, so I've already kind of checked those 2 boxes. Let's kind of work our way through how we're able to actually pull personal leverage and time leverage when we invest passively. So when I invest passively in a deal, I get to leverage an operator's knowledge of the strategy, okay, the market, their underwriting, lending, and everything. Like, I don't have to become an investing pro. I don't have to know all the ins and outs of multifamily or self-storage. I need to understand at a pretty high level what's happening, but I don't have to be, understand all the different types of lending. I don't have to understand the ins and outs of a market. I can leverage somebody else's expertise. Okay, which leads us to number 2. I can leverage an operator's expertise and track records and business systems. Okay, I don't have to set up all the different systems within the business. I don't have to, prove myself deal after deal after deal. Okay, when I'm passively investing, I get to leverage that operator's built-in track record and business systems to get access to whatever deal they have out there. I also get to leverage their team. I personally don't have to go hire the brokers, the property manager, coordinate with lending, hire the legal team or the accountants. Okay, I get to leverage the operator's built-in team to get in that particular deal. I also get to leverage their credit and ability to secure a loan. Okay, I don't know about you. For me, jumping from even just like 20 single family properties to trying to secure an $80 million like multifamily building would be an immense challenge for me. However, when I invest passively, I get to leverage the operator's ability to get credit and lending to secure the loan. Okay, that's amazing. I also get the ability to secure, take advantage of other investors' money to enter the deal. Again, maybe I only have, you only have like 50 or 100,000 or 200,000 or maybe $1 million in your bank account. That's awesome. Okay, but you can only buy so much real estate. But if you want to, enter in an $80 million asset or larger, now we get to take advantage of other investors' money to go access that larger asset. But most importantly, we talked about all the personal reasons just right now, 1 through 5, of why we might want to, invest passively. But it's number 6, that return on our time. What kind of time leverage can we create here? Okay, I get to leverage the operator's time that they've put in to underwrite the deal, complete due diligence, and actually run the deal. I don't have to do that all myself. Okay, so for me, that time leverage is the most important thing that, investing passively actually affords me. I consider time my most valuable non-renewable resource. Once it's spent, it's gone. Okay, I choose to spend my time in other ways. And so I'm so thankful whenever I find brilliant operators to invest alongside. All right, guys, thanks so much for joining me today. If you would like to learn more and see other videos, join me at passiveinvestingwithwhitney.com. Go there. I got some free goodies for you, so make sure to fill out the little form there, and then we can also hop on a call if you'd like. Thanks so much for joining me today, and I look forward to seeing you in future videos.